on the back of the new president's tariff announcements, we've actually seen steel prices increase by about 20% over the last little period.
So the price you're charging in the US is already higher?
Correct. Prices are increasing. Steel prices are increasing, yes.
Okay, more broadly, will tariffs, whether specifically on steel or imposed as reciprocal tariffs for taxes such as Australia's GST, complicate Bluescope's overall outlook?
So Bluescope's basic strategy is for us to produce in the countries that we invest in. So our strategy is largely around domestic production and consumption. It's not based on export. Now, we export some product out of Australia to North America, 200,000 to 300,000 tonnes a year. So that's potentially impacted by the tariffs. It's still early days. We haven't seen the final design of any tariff system, but that's far outweighed by the amount of steel that we produce in country, where we produce more than 3 million tonnes of steel. So 300,000 tonnes of tariffs on exports that go out of Australia to the US versus 3 million tonnes of benefit that we get from the tariffs driving up prices in the domestic US market.
Will Bluescope continue to export that Australian production into West Coast markets of the US if Australia doesn't secure a tariff exemption?
A large percentage of the product that we export comes out of Australia, that 200,000 to 300,000 tonnes a year, and some of that material goes to the west coast of the US, and it goes as an intermediate product, a hot roll coil product or a cold roll coil. It goes to our business on the US, where we metal coat it and paint it, effectively turn it into colour bond. So the product that we export is then significantly transformed into a value-added product. The West Coast US market is largely an import market, and what we saw last time that Section 232 tariffs were put in place was we saw prices increase because companies had to absorb the tariff and continue to import steel on the West Coast. So it is certainly likely that, irrespective of the outcome of the structure of the tariffs, that there would still be some product that would flow from our Australian business to our owned business on the US, where we'd further transform it.
Despite your local market strategy, will there be global repercussions from the tariff and trade uncertainty? For instance, do you expect to see a rise in steel dumping from Asian producers?
Well, we're already experiencing some of the worst conditions that I can recall in terms of pricing and spreads in Asia because of the significant amount of steel that's being exported out of China as the Chinese economy has softened. So our asset in Port Kembla, the blast furnace and the Port Kembla Steelworks produces 3 million tonnes of steel a year. In the calendar year 2024, China exported 110 million tonnes of steel. So that gives you some sense of the scale of steel that's coming out of China, and that's having a very dramatic impact on margins in the ASEAN region. So the Australian business has been dealing with this for more than 12 months now. Part of the reason for the softer earnings in the half, the impact of spreads on our Aussie business. So really our focus in Australia around selling more of the value-added premium products like ColourBond, ensuring the business is as efficient as it can be, and we're going through a cost-out and efficiency program. They're the things that we put in place to try and deal with those macroeconomic conditions until there's some change that has a positive impact on the region.
Mark, is Bluescope interested in taking on the Whyalla Steelworks?
So the Whyalla Steelworks is clearly going through a very challenging time, and part of the reason for that is, again, the very soft pricing and the very weak margin conditions that exist in the Asian business. I mean, we have no involvement with the Whyalla business. We're quite different businesses. That's a long products business. We're a flat products business, but we are former brothers and sisters of Whyalla, so we're very empathetic to the very tough situation that they're in. Any interest of Bluescope in the Whyalla asset would have to be assessed at the time. I mean, it's currently owned by someone else, so it's hard to speculate on what the outcome for Whyalla might be. Other than we're a steelmaker, I understand the challenges of being a steelmaker, and we stand ready to help if and when we're needed.
You were spotted talking to the South Australian Premier yesterday. What would make Whyalla a good investment from Bluescope's perspective?
It's pretty simple, really. I mean, what makes any investment good is the return that you can get on that investment. We invest across 15 countries, so the contest for capital inside Bluescope is pretty intense. And with limited capital, you need to put it where you can get the best return. So what would make any investment attractive is the return that you get and the sustainability of that return and the growth that comes from that. We're the only other steelmaker in Australia, and the Premier of South Australia is on the public record as saying he's spoken to us about some of the challenges in that business, and we've provided some assistance in the past. So, as I said, we stand ready to help if and when we can.
Well, on the question of help, what would you be able to offer if the Premier came and asked you to do so?
Well, that would depend on what he was asking for. I mean, we've clearly got incredible capability as a steelmaker. We produce raw materials that can be used by that business. We've sold coke to the business previously. We've provided some technical advice. So it really would depend on what the request was.
Would you categorise your discussions as you are now in talks with the South Australian government?
I mean, the Premier's, again, on the public record, said that he's spoken to us about the challenges at Whyalla, and we stand ready to assist and help if and when we can.
Mark Vassella, terrific to speak to you.
Thank you.